What's up, guys? Stas here. So in this video, we're going to be breaking down two dividend stocks that I'm looking to buy right now in June 2020. And quite honestly, I already own these dividend stocks, so I'm looking to buy more of them. And I want to break down in particular why I'm bullish on both of these. I want to take a look at their dividends and break down some metrics involving their dividends. And before we even get into the video, guys, this is not meant for the short-term trader, for anybody that's looking to trade and invest in a company for 1 to 2 years. The whole dividend investing atmosphere, it's meant for the long term, right? For 5, 10 plus years out. That's where you really get the benefits of passive income from dividends and the increasing cash flow from these companies. Because think about it, guys, treat it like a wage, right? Treat it like how much you get paid at your job. So for example, let's say you make $50K a year at your job. Every year, your wage, your salary should be increased, right? Like 2, 3%, whatever it is. And it's the same thing here with dividends. Let's say I put money into the first stock we're going to talk about here, which is Abbvie, right? Let's say I put in $10,000. It's paying me 5% a year, so I'm making $500 in dividends. And every year that goes by, it's going to increase by however much they raise that dividend per year. So essentially, your money, your passive income, your dividends, they're increasing over time as the company becomes more successful, makes more money, and therefore increases the dividends. So if you guys enjoy the content, as always, we're going to jump into it right now. Hit that like button, consider subscribing to the channel. And if you guys actually want 2 free stocks from Webull, that's linked down below in the description. They're valued up to $1,400. All you have to do is put in $100 into the account to get those. So if you want free money, that's linked down below in the description. So the first stock, like I alluded to a couple seconds ago, is Abbvie, ticker symbol ABBV. And this is a pharmaceutical company out there. They produce a lot of drugs, right? Different drugs for different, needs. And we got a lot of good news about their top drug, which is Humira. And if you guys didn't know, Abbvie's been under pressure over the past year, 2 years, as their patent for Humira is running out, right? And if you guys don't know about pharmaceutical companies, the way they make a lot of money is they formulate drugs, they patent these drugs, then they raise the price of the drugs so other companies can't compete because they have a patent, right? So they raise the price of the drugs and they make an insane amount of money. But when that patent runs out, that's when the generic brands could come in, lower the price, and that's where Humira or Abbvie would have to drop the price of Humira to compete, because many people would be like, I'm not paying this $20 for Humira, whatever. I'm going to go buy this here for $5. So that's why patents are extremely important when it comes down to pharmaceutical companies, right? And the risk of Humira obviously losing its patent had a lot of downwards pressure on Abbvie. Their revenue is honestly under pressure a bit due to Humira being their top drug, potentially losing a lot of revenue. But now we got some very good news about Humira. To push back competition a bit further, the company, Abbvie that is, actually built up as many patents for Humira as it could in an effort to hold off the U.S. biosimilar competition as long as possible. And get this, guys, a class action lawsuit was brought against Abbvie alleging that the company engaged in practices that violated the U.S. antitrust laws. But on Monday, recently, a federal judge ruled in favor of Abbvie, finding that the drug maker has exploited advantages conferred on it through lawful practices. And this means that they're actually able, through 2023, to continue with this patent on Humira. And look deeper into that, guys. I'm sure I've missed out some key things there, but look deeper into this. So now until 2023, it's looking like, okay, they're going to rake in a lot and maximize those profits for Humira until that patent is, until those different patents run out now in a couple of years. So that means over the next couple of years, a lot of revenue is going to be coming into Abbvie, meaning a lot more dividends and hopefully an increase in those dividends. So a lot of analysts have price targets now on Abbvie at about 115, 120 bucks. And quite honestly, anything under 100 in my eyes, right, from owning the stock now for a couple of years and watching it, anything under 100 is a buy. And when it comes to their dividend yield right now is a 5.12%. So not only are you getting that potential growth over the next couple of years with the Humira patent and of course all of the other drugs that they have formulating, etc., you're getting a juicy yield, right? You're getting that 5.12% yield. Annual payout is $4.72, and the payout ratio is about 45%. And if you guys don't know what a payout ratio is, it's this, right? So let's say a company makes $1 in EPS, meaning in one quarter, they make $1 in earnings per share. And let's say they have a dividend for that quarter of 50 cents. The payout ratio is going to be 50% because out of their earnings, that dollar earnings, half of those earnings went to the payout, which is the dividend. So that's why it's called a payout ratio. So as of right now, they're only paying about 45% of their earnings in the form of dividends, which is great because that gives the company more room to actually grow that dividend, which again, as we look at these companies, we're looking at them as jobs. Not a job because you don't actually have to go work there, but you're looking at it as a stream of income, as a wage that increases over time. That's the goal, right? And right now, their 5-year growth rate, guys, get this, is 21%. That is absolutely incredible. They're growing their yield very quickly. And if you guys want to know where I get this information from, it's from Seeking Alpha. This is not sponsored whatsoever. They do not sponsor my videos. That's just me being honest as to where I actually get a lot of my information. Another good source is Yahoo Finance. There's a lot out there, but I use mostly Yahoo Finance and Seeking Alpha. So the first one there, the first dividend stock I'm buying right now is Abbvie. Super high yield, super strong dividend company in my opinion. Humira extended to 2023 is huge. A lot of revenues coming into this company, so I'm bullish. I'm loving this stock over the next couple of years and beyond. So the second dividend stock I'm looking to buy right now is PepsiCo, ticker symbol PEP. And right off the bat, you guys might be saying, Stas, Pepsi is pretty overvalued. They're at a PE at about 25 right now. But the truth is, I'm willing at this point in time to pay up a little bit for the quality companies. Remember, this is not a stock I'm looking to get out of in a year from now. I'm looking to hold this for 5, 10 plus years in my different accounts, right? I have an M1 Finance dividend growth portfolio. I have another long-term portfolio that's private. I have my Roth IRA where I have a lot of these types of stocks in there. So this is the time frame I'm looking at, right? 5, 10 plus years. So the fact that the PE ratio is 25 right now, which is a bit pricey, and typically Pepsi would be nice under 20 PE, I'm okay with it, right? Because dollar cost averaging is your best friend. Buying periodically, once a month, twice a month, whatever it is, over a long period of time, it's going to smooth out your average cost. So if I'm picking some up here at 128, a bit overvalued, it's okay because in a couple months, in a year or two, I'll probably be buying at an even undervalued price. Let's say if it goes down under $100, I'd be buying at undervalued prices, which again will smooth out the average cost over time. So PepsiCo, you guys know what Pepsi is. It's a conglomerate. It's a company that is needed no matter what economic time period we're in. Same thing with Abbvie, which is why I really like these two companies, these two stocks in the time period that we're in. And if we jump over here to Safari to give you guys a better idea of what products they actually sell, it's a lot. It's not just Pepsi, right? It's a lot of different beverages and a lot of different snack foods. You guys can see Mountain Dew, Pure Leaf, Kavita, Lipton, Aquafina, Gatorade, Bubbly, right? They're actually getting into some new age, new style products as consumer interests are shifting, right? they're getting into bubbly, they're getting into cold brew, they're getting into, this naked pressed. I have no idea what that is, but, it seems like a green beverage, healthy stuff. Hey, guys, that's good, right? Because the consumer interests, they're going from a place of very unhealthy to kind of more healthy, although the unhealthy stuff is still going to be there no matter what, guys. That stuff's not going away, at least in my personal opinion, but the fact that they're adapting is very good. We've seen companies like Kraft Heinz, not to pick on them, but they haven't been adapting very well in terms of new products, new consumer, following the consumer trends, and that's why that company is not doing well. They cut their dividend, the stock price is getting slammed. So the fact that Pepsi is increasing the dividend, we'll get into that in a little bit. Their products are shifting with the consumer needs, consumer trends. That is a very good sign, in my opinion. That is one reason why I'm bullish on the stock. And take a look at this site, guys. I actually didn't know much about snacks.com until a couple weeks ago. Actually, I'm going to shout out PPC Ian, another amazing dividend YouTuber. Much better dividend videos than me, quite honestly. He's great for dividend investing. He actually brought this to my attention, snacks.com, which if you guys actually order these different snacks, and by the way, Pepsi owns these brands, these snacks, and your order's over $15, you actually get free shipping, I believe, across the United States. So you guys can see these are all the different snack food products that Pepsi has, right? Smart food. I'm crazy for smart food, quite honestly, guys. Sabritas, Ruffles, Rolled Gold, Tostitos, the list goes on, right? So go and do more research on your own, of course, when it comes down to products that Pepsi owns, but just know it's a lot of different products, a lot of diverse products here in the snacks, beverages, etc., right? And again, it's a bit pricey, 25 PE, but when we're looking at their dividend numbers, their dividend numbers are pretty attractive, right? At the current price, the dividend yield is 3.2%, pretty solid, right? The annual payout is $4.09. The payout ratio is about 76.8%, a bit higher than Abbvie, but still, you guys have to realize Pepsi is at a point in time where they're not a growth company. They're more of a company that is in the maturity phase, and they're just looking to please shareholders at the end of the day, right? They're getting this capital. You have to realize when a company gets money every quarter, they have different things they can do. They can take this money and they can grow the business, or they can take this money and pay it out to shareholders. So now that the business, there's not much growth left. Sure, it's growing at 2%, 3%, 4% a year, whatever it is, but there's not crazy growth left. So they're looking to take that money instead and put it into the pockets of the shareholders, and then the shareholders can do whatever they want with it. They can spend the money, reinvest the money back into Pepsi, or they can take the money and reinvest it in, let's say, a growth stock or a different dividend stock. So Pepsi, that's kind of why their payout ratio is high. It's not because they're about to fail or something. No, it's because they pay more to the shareholders. That's kind of their model right now at the point in their business life cycle. And the 5-year growth rate is very solid as well. It's not 20% like Abbvie, but it's about 8.5% here. And their dividend growth has been for 48 years, meaning through all economic cycles, over the past 50-ish years, they've grown their dividend, which is very good, especially for the uncertain times that we're in the economy right now. We have no idea what's going to happen over the next couple of months. So having a stable dividend yield, a stable return, in a stock is absolutely incredible. So overall, guys, that's it for this video. I don't want to drag it too long, but those are 2 dividend stocks that I'm looking to buy right now. I already own them again, and I actually just bought Abbvie and a little bit of Pepsi literally this week. So let me know down below in the comments, what are your thoughts on those stocks? As always, if you found value in the video, hit that like button, consider subscribing to the channel, and again, if you want 2 free stocks from Webull valued up to $1,400, check that link down below in the description. All you have to do is put in $100 into the platform, and that's when you get the free money, guys. So I'll catch you all in the next video. Stay safe out there. As always, peace out.